You know that feeling when you open a loan statement and you look at where your payment actually went? Say your mortgage payment is $1,500 a month, and you've been paying it faithfully for a couple of years, and you figure you've made a real dent in what you owe. And then you look at the breakdown and you see that of the $1,500, $1,380 went to interest and only $120 went to the actual loan balance. And you just sit there and you stare at it and you're going, wait, what? What on earth? That feeling, that moment of, are you kidding me, is exactly what today's episode is all about. Because once you understand it, you can begin to do something about it. Well, if we haven't met yet, I am Darren Vilardo. I'm a financial advisor, the primary advisor and founder at Tekton Wealth Advisors. And I've been doing this work now for almost 30 years. I started this firm because I genuinely believe that retirement planning should feel like a conversation, not a sales pitch, not a lecture, and definitely not something you dread. I grew up in a family that worried about money a lot. And I think that's part of why I do what I do, because I know what it feels like to have questions and you're not even sure what to ask or how to ask. So this series on financial jargon is my way of answering those questions one word at a time in plain English for people who are getting close to retirement or who are already there. And I just want to understand, I want you to be able to understand what's going on with your money. So if this is helpful to you, and I hope it is, then I'd really appreciate it if you hit the like button and subscribe to the channel. It helps more people find the series who need it just as much as you do. All right, today's word is principal. Here's the simple definition. Principal is the original amount of money that you borrowed. It's not the interest, it's not the fees, it's just the actual amount that went from the lender to you. And that's the number that you agreed to pay back. So if you took out a $300,000 mortgage, $300,000 is your principal. Everything else, all the interest that you pay over the life of the loan, that's on top of that number. Now, here's how a financial professional might describe or define principal. Principal refers to the outstanding face value of a debt instrument or loan obligation, representing the original corpus of borrowed funds, exclusive of accrued interest, fees, and other ancillary charges. Yeah, corpus of borrowed funds. That's a lot of Latin for, hey, it's the amount that you actually borrowed, right? So let me give you 3 layers on this one, if you will. Bear with me here. Layer 1, what principal is, it's the original loan amount. Now that number never changes unless you pay it down. Every payment you make, some of it goes to interest and some of it actually reduces the number of that principal. The part that reduces this number, that's principal, okay? Layer 2 is how that split works and why it surprises people. Here's something most people don't know, and that is in the early years of a loan, most of your payment goes to interest, not to paying down what you owe. And believe me, that is by design. The banks and lenders calculate interest then on whatever balance is left. So in year 1, the balance is high, so the interest is high. And over time, as the balance or principal drops, then more of your payment starts being applied or going towards the principal. That's why early in a mortgage, it can feel like you're barely moving the needle. You're not imagining it, mostly paying rent on the money. Now, layer 3 is why getting the principal down faster matters, because every extra dollar that you put towards principal reduces the balance that you're being charged the interest on, which means less interest going toward, right? Less of your money is going toward interest. Now, so when you pay off a loan faster, more of your money stays yours. I really believe this is one of the most powerful concepts in personal finance and one of the least talked about. That is, if you carry a loan into retirement, your principal balance is still what you owe. That number matters because it tells you exactly how far you are from being free of that payment. And in retirement, where income is typically fixed, A monthly loan payment isn't just a name or a number on a statement. In fact, it's groceries, it's travel, it's what we call margin or breathing room. So if you've ever wondered whether it makes sense to make an extra payment before you retire, that extra payment goes entirely to principal. It doesn't touch interest, it just shrinks the balance. And that can change your retirement picture. Here's the part that most people skip. Most people look at the monthly payment number and stop right there. They don't look at the breakdown. They don't know how much is going to interest and how much is actually reducing what they owe. And if you don't know that, you can't make a smart decision about your debt, whether to pay extra, whether to refinance, whether to just stay the course. The statement is there. The breakdown is in it. Now, here's the question. Would it make sense to take a closer look, to get a little in the weeds, right? So the principal, again, is the original amount you borrowed, not the interest, not the fees, just the balance. The more you understand about how your payments work, the more power you have over your debt and the more power you have over your retirement. So if you've been wondering about what your debt picture actually looks like as you head into retirement, I'd love to sit down and walk through it with you. Would it make sense to take a closer look together? And by the way, if this episode has helped you, please like this video and subscribe to the channel. Every one of those meets someone else finds this series who can really use it. And as always, the words that we live by here, our motto, our ethos, if you will, is we will serve you, not sell you. Because quite frankly, we love serve and care for our clients so they can live their best life in retirement. As always, thank you so much. God bless, and we'll see you in the next one.